Okay, hi guys, and welcome to our other session here. I think we just have a little bit of a glitch here, but it's sorted now. So I think some students might be coming in a little bit late, and that's why I've delayed the session with, let's say, 5 minutes. So, but those that are here, we will just continue. And then the others will perhaps get us along the way. But I'm then willing to perhaps assist them if there's any additional, if there's any questions that they might have throughout the session, okay? So you know the normal drill that if you're present, you just indicate. You just indicate by means of your student number. I'm just trying to mute everyone quickly. Give me. There you go, mute everyone. Okay, so I've muted everyone so that we are not disturbed with the background noise. Okay, so I think the last time we chatted, we said we're going to assist each other in terms of trying to do a question exam that is sort of more integrated in approach. So today, that's the plan of the session. Okay, if you're able to see the screen, just say yes, because I'll try to share it now. So to me, it shows that it is. I am sharing currently. So yes, okay, cool, that's fine. So basically, when I looked at this paper, look, it's not different to what we've been doing for the past couple of sessions. It was basically the same thing, and just that I think the only thing that would perhaps have stressed you is because you're under the exam conditions, and you didn't sleep properly the previous night. But then you will see, as well, along as you go into the session, you will see that the question itself, it's actually nothing new, because if you understand your principles, everything remains the same. So we'll go quickly, we'll go briefly with the first part, and then perhaps if we don't finish, then we're going to perhaps carry it over to the next session, perhaps. Okay. So what I'll also do is for the upcoming session, which is next week, what I'll do is I'll then load again a question in terms of what it is that we're going to do in our next session. Okay. So perhaps that will come, not perhaps, that will come from our TAT letter that has past exam papers and comprehensive questions, which with solutions. Okay. And then perhaps thereafter, once we see, or on the issue, once they issue out the exam timetable, then we'll perhaps try and see if we perhaps can squeeze in 1 or 2 classes so that I can assist you, sorry, so that I can assist you with, the topics that you guys are perhaps struggling with, you know. So after next week, then we'll see how it's going to go about, because I think the timetable will only be issued. The timetable will only be issued, I think, over the weekend or somewhere like that. So we'll only evaluate then as from next week to see whether we're going to have additional sessions or not. Okay. So let's start. Share my screen again with you. Screen 2, and then share. Okay, there you go. Fine. Now, sorry. The normal exercise is, as we said, when you receive your exam paper, then obviously you will read through the exercise. And never mind my markings now here or my highlighting, because I was reading the question last night. So you receive your question paper, and then you will read the normal way, like you're reading the newspaper, just to get an understanding as to what it is that is going on within the question itself. Okay, and then up until you get to the section where the required has been given, right? Okay, so you will see now this question was, sorry, this question was worth 57 marks. So that's almost half of the paper, right? Okay, and I must be honest that this was a fairly, or this was a fair paper compared to what perhaps I have seen in, I would say, in the past. This was a fair paper because it's like the normal stuff that we were doing over the couple of 2 weeks. So if we have those principles, I did not foresee any issues with you trying to answer this section. But over and above what they've asked here, I've tried to actually give you a complete picture of everything else, not rather than sticking to what they're asking. For instance, I will try and do a journal entry there and there. Okay. So required one says you need to disclose the following notes, right, to the annual financial statements of Pump Limited for the year and the 31st of March 2019. Okay, the PPE note, as well as the non-current asset held for sale. Okay, so I think this one I might have missed it. I didn't do it within the solution, but that's fine. We can do it together. Okay, and then the second part says you need to calculate the deferred tax balance. Okay, using the statement of financial position approach for March 2019, and the question is asking you to only do for properties. Okay, you don't do for machinery, you don't do for vehicles if there's vehicles, you don't do for land if there is land. Okay, it only says you need to do for deferred tax. But now what I'm clearly highlighting to you is, even though they have asked to do a calculation of deferred tax balance for properties only, but within the question itself, I have also done for all other items. That was your land and that was your machinery, right? But now you would notice within the suggested solution itself, for machinery, we couldn't calculate the deferred tax because we were not given as to what is the wear and tear rates or values for machines, right? Because I am saying this because in the previous class, I have clearly said that journal entry 1.2 was not required, but I still find people, so journal 1.2 was not required, but I said to them, I'm gonna do it anyway, but I still find people still asking me as to why did we do it, okay? So now I'm clarifying to you that we are not required to do deferred tax calculation for other items, but I am going to do it in any way just to show you the complete picture. Then number 2 says, please prepare a journal entry to correctly record the allocation of impairment loss on the initial recognition of the disposal group, right? In the accounting records of Pump Limited, 31st March 2019. Okay. I have a problem with this journal. I have a problem with this because in the standard itself, or let's say in the question itself, there is only 2 types of items that fail or that fall within the impairment calculation itself, right? And then one of the items, when we need to do an allocation, does not fall within the standard of IAS 36, right? Because that particular item, and I'm gonna come to that when you get to the question, and then you understand more what I mean. And then one item actually does fall within the standard, okay? And then here they say you need to disclose only the section that deals with assets, okay? In the statement of financial position, blah, blah, blah. And then, so what you needed to do, you needed to do non-current assets, and then as well as current assets. So what I've done within the question itself, I've only done non-current assets within the section itself. But now you would have noticed that there was also an item for current assets, which relates to inventory. Oh, I think I've done it, yeah. But anyway, okay. So now, so you would have then, as part of your solution, you would have then, this would have been your PPE note. Okay. And then I'm going to show you later as to why I did not do the PPE note. But in terms of the standard, you need to do the PPE note. You need to do the IFRS 5 or non-current assets held for sale investment, held for sale. You need to do them. So you need to disclose them as a separate note because they are dealt with within a separate standard. But now you will see within the response itself here, I have just de-recognized it and then try and re-recognize it as a IFRS 5 asset or investment, whatever you call it. But in terms of the standard, you will need to do it separately. Okay. And then now your deferred tax calculation. This would have been your skeleton, or this would have been your template or your framework, and they've only required you to do for 31st of March 2019, right? Okay. And then also your standard would then have requested you, or sorry, not standard, your required would then requested you to do a statement of financial position. So for Pump Limited, statement of financial position at 31st March 2019. And then what they've asked you is to do the asset section. So it's both your non-current as well as your current assets. Okay. And then what I've tried to do for you guys is to actually show as to how would the note, if you were then required to do the note, how would that deferred tax note look like, right? Okay. Okay, now, so you would have plotted this, but I think what's very important is, so when you're plotting your skeletons, you need to tell the marker as to what it is. So the same thing that the marker has asked you. So the same thing that the marker has asked you in the required, you will need to tell the marker as to what it is that you are addressing in your required. Okay, so the marker said you need to do a note for Pump Limited for this year, and then this note should be for PPE as well as for non-current asset held for sale. I've explained to you how I've done non-current asset held for sale. Okay, and then the total column is not required, but I have done the total column just to show you the complete picture. But you are not required to do it. So if in the exam they tell you that not do it, then don't do it. Otherwise, you're going to waste time. But for practicing purposes, I think not really a must. You don't have to do it, but you must just read your required very carefully in the exam. Perhaps there could be that there is marks allocated in the exam if they say you need to do the total column. Okay, fine. Now, let me go back to my skeleton. So in my skeleton, I'm telling the marker that Mr. XY, I'm doing a Pump Limited, and this is the notes in terms of PPE, right? I already understood now what was happening to the question, that I've got admin buildings, I've got manufacturing buildings, and I've got machines. But then I know one of the machines, along the time, then they were transferred from PPE into IFRS 5 investment, okay, or into IFRS 5 asset, whatever you call it. Okay, and I also know that they've asked me to do a deferred tax for 31st of March 2019. I'm telling the marker that I am doing that for you. Okay, the same as the statement of financial position is for Pump Limited only for this specific period. Okay, you will now see that the journal entry, I have done the journal entry within my calculation somewhere here, and then I'm going to show you that later on as to how that entry look like. Okay, so for now, let's park it for now. So I'm going to show you how that entry look like. So for me, what's important here, what you're going to do, it's more about the principle. Because I think if you have the principles right, then within those principles, you are then able to do any questions. Okay. So don't be scared when someone is telling you about that the question is integrated or the question is integrated. Fact of the matter is, you will still be able to spot as to, okay, not you will still be able. So if you are able to spot as to what topic is it trying to address, then I think then it makes things easy for you. Okay. So let's go straight to the question. Right. So remember what we said is that we are going to take point scenario number one, and then scenario number one, we are then going to plot it across all our required, because that's how we're going to accumulate marks as far as the good exam technique is concerned. We are not going to be all over the place. We are not going to be in point 1, point 2, point 3, point 4. No. We're going to start in from the top with point 1, address point 1 according to all our requirements, and then you're going to move to point 2, and address to point 2 in terms of all our requirements. Then you're going to move to point 3, what, and so forth and so forth. So your principles, your principles is what is going to get you through the course, not accuracy. Your principles, you must make sure that you've got your principles correct, because that is going to assist you in terms of getting through this course, but also your exam technique as well is going to assist you in getting through this module. Okay, fine. Now, okay, so the papers is 2 questions. You need to answer all questions. No matter how good your exam technique is, if you do not answer all questions, you are running the risk of not making it through the module. And then if you do not show all your calculations, you're also running the risk of not pulling through to this module, okay? Make sure you answer in the correct book, and then each question must be attended on a new page. So question 1 must be done on a new page, but I also suggest that each required attempt it on a separate page, so that you at least you have a clean and illegible writing that you have. Okay, so and then if they say that you must stick with 1 or 3 minutes, stick to that 1 or 3 minutes for question 1. Once the 1 or 3 minutes is over, then you move to question 2. Okay. So Pump Limited is a company that's involved in manufacturing. So for me, from a tax viewpoint, that's so important for me. Okay, because I know if I'm in the process of manufacturing, there's certain benefits that I'm going to get from SARS. Okay, of different types of water pumps in South Africa, the company is at 31st March year end. That's very important as well. Fine. Now we are reading with comprehension. Okay, because once you read that part, you don't want to come back there again. Okay. Now the following details are available regarding the assets of Pump Limited. Now, Pump Limited has land and buildings, or have land and buildings, okay? So these land and buildings were bought on the 1st of April 2015, okay? So this was a property and it is used in the process of manufacturing, okay? They bought this for 5.2. However, that 5.2 is split between land, is split between buildings, right? Okay. Now on acquisition date, it was determined that the buildings had an estimated useful life of 25 years. That's important, and a residual value of 500,000. So once the useful life expire, or once the 25 years expire, I am expecting to recover at least, or I'm expecting to sell this item for 500,000, depending on market conditions at that time. Because remember, this estimate I am now making it on 1st of April 2015, but now after 25 years, this estimate might have been different. Okay, so on acquisition date, this is available for use, and it was also brought into use. So from an accounting perspective, this part is important, but also from a tax perspective, this part is important, because from a tax perspective, it says, then I can start claiming the benefit that SARS gives me. Okay, so that's very important that you make this distinction between those two. Okay. Now, from the required that we have, where can we start plotting? Okay, or let me say you have an option of either doing them together, they say all land together and then all buildings together, but it's going to be impossible in terms of the technique that you use. So then I suggest that if you are now dealing with this part here, you do land and you do buildings separately. Okay, because you do land separately and you do buildings separately. Because what's going to happen is, now if you want to do land together, all the lands together, which means that now you must jump from here and then you jump from that side. And that's not, I don't think that's going to help you. Okay, fine. Now let's start with land. Let me just open up all this quickly. Fine. So we know what the cost of the land is. The cost of the land is 2 million rand, right? Okay, fine. That's the cost of the land. So I would so now I would have went then and then plotted at the end of March 2018. I would have a carrying amount of 2 million rand for land. Okay. Then I go to my deferred tax calculation. But remember, land was not required, but I'm doing it anyway, right? Because that's what the question tells you, that land is not required. Fine. But now in the 2018 financial year, land would have been at cost, right? Okay, so we move on. But now we go on further in the question and read that. Okay, so you go on first. So the question says buildings was 3.7, right? And then so on this date, building was at 3.7. Okay, we now go back to our question and then plot that. Okay, building was now at 3.7. Okay. Why do I have that there? Okay, I think there's my let me check it quickly. Yeah. Okay, I think I've shipped these two around. Sorry, guys. Okay, I think I've shipped this. I was supposed to open this part instead of that other part. Okay, sorry about that. I'm sorry about that. Okay, but so it doesn't even change the whatever. So it's 1.5. There's building, and then okay, then building is 3.7, right? But then we know that building had a useful life of 25 years and a residual value of 5 million rand, right? Okay. And then obviously then we know, so if you go to our calcs here, I'm just gonna go to my calc quickly, manufacturing. Okay, there is your building, right? Fine, but then we know that we needed to we needed to do our depreciation up until 2018, because we bought it when? We bought this on the 1st of April 2015. So it would have been 2015 year, so it would have been 2015 year, 2016 year, 2017 year, and 2018 year that we had to account for the depreciation. Right? Yeah, so because remember we bought on the 1st of April 2015, so it's gonna be 2016 years. So 2016, 2017, and 2018, because our year starts from the 1st of April. So it ends on the 31st of March 2015, but then start on the 1st of April 2015. So it would have been 3 years. Okay, and then there is our carrying amount. So now we know that buildings were sitting at the value of 3316 at the 31st of March 2018. But now that value, we can also go and use that value where? In our deferred tax calculation. I'm opening the wrong one. So yeah. Okay. So we can go and use somewhere here. So we can go and use that value in our deferred tax calculation, because you already know what the carrying amount is. So we're just transferring that. Okay, fine. Now for tax purposes, the question would have told you right at the bottom, because remember now you already read what the question says. I think it was saying 5%, that all buildings, for SARS point of view, they're going to have a 5% allowance, right? We know that out of our head now, that all buildings will receive a 5% allowance. So a 5% allowance for buildings gives you an amount of 185. So now in the beginning of 2018, you now have what your carrying amount is. Okay. Fine. Now, at this point, we're done with land, sort of with buildings, but within the question itself, there was a statement regarding land that says that land was revalued. So this question now requires us to jump now in between. Okay, so let's go back quickly. So we do have the carrying amount at 31st of March 2018, right? And then we know that nothing happens. There was no revaluation for building. And then you're going to see now why I'm saying that there was no revaluation for building, but only for land. Okay. So now we can go and plot depreciation for the current year for the building is 128. Okay. There is no revaluation. I'm going to show you now why I'm saying that there were no revaluation, because I think you would have perhaps made the same mistake that I made initially. Fine. Now it says here, on 31st of March, an independent zone appraiser determined that the fair values of the land, right, not the buildings, of the land relating to the respective property for manufacturing property and administrative building. So the manufacturing property contains two things. So both the manufacturing and the admin building consist of two things. What does it consist of? It consists of land and buildings. Now the valuation or the revaluation is only in respect of the land, not the building. Okay, so that is why So that is why you will see that there is no revaluation for land, for building, but there's only a revaluation for land. So what they're saying is that at the end of 31st of December, for the at the end of 31st of March 2019, the manufacturing property must be sitting at 1.7. Okay, so 31st of March 2019, the manufacturing property must be sitting at 1.7. So what is the revaluation amount? So what is the revaluation amount? How much was land revalued by in the 31st of March 2019? It was revalued by 200,000. That's correct. Okay. Now, from a deferred tax perspective, how are we going to treat that 200,000? Is there going to be are there going to be temporary differences arising of that 200,000? Yes, there are going to be a temporary difference arising through that for that 200,000. But then remember that 200,000. When are you going to pay? When are you going to pay future tax on that? Okay, we are going to pay future tax when we sell the item. Okay, remember we said from zero for items that are its cost is going to recover through sale. From zero to up to cost, the deferred tax, there is no deferred tax because that's exempt, and then anything that's above that will then have to provide for future tax at the prevailing CGT rate. So you are correct that we have to provide for deferred tax at the prevailing rate of CGT 80% at 28%. So that is correct. So within your deferred tax calculation, I would then want to see that I am going to provide for deferred tax at 80%. Now I have a liability of 44,800, right? Okay, so we're still together in that regard. Okay, fine. Now, okay, and yeah, so now obviously you do your recon, blah, blah. You do your recon for both land and buildings, fine. Now, we're done with now land and buildings, right? In terms of sorry about those noise. There's guys working outside. Sorry about that. Okay, and then now if we so now we're done with the first part. So the second part now we're dealing with. It will now relate, because I understand what the question is about. Now it relates now to admin property. Okay. Now on the 1st of May 2017, management purchased a vacant land, okay, at a cost of 2 million rand with the intention to erect an office building that's going to be used for admin purposes. Okay. The construction of the office building commenced on the 1st of June 2017. So this, so you've done two things. So you've bought a land. So in the 2018 year, you bought land, because remember, 2018 year starts on the 1st of April 2017 up until 31st of March 2018, right? So you've done two things. You've bought land, and from the land on the 1st of June, which is in 2017, which is in the 2018 year, then you start constructing a building. Okay, when you bought, how much did you, let's first deal with the land. How much did you buy the land for? how much did we buy the land for? Forget about the building now for now. How much did we buy the land for? We bought the land for 2 million rand, right? That was on the 2018 financial year. So when you come to the 31st of March 2018, the cost of the land would have been sitting at 2 million rand. Okay, right? It would have been sitting at 2 million rand. Fine. So let's first address the land first part, and then we move on. Okay. So obviously, when you go into your deferred tax, you would have shown that the cost of the land at 2 million, but then because this portion is exempt, because you are up to cost, so this one is exempt now for deferred tax purposes. So in terms of IAS 12, we are not recognizing anything. However, we know within the question that the land for admin, the land of the admin property was then revalued come to the 31st of March 2019. How much was the land so it was revalued to 2.3, but how much was the land revalued by? How much was the land revalued by? So how much did we revalue the land with? How much did we revalue the land with? So initially the land was 2 million when we started, right? For the 2018 financial year. But now the 2019 financial year, they are telling us that the land is sitting at 2.3 million. So what is the difference between what the land was initially to what the land is currently? Yeah, so your answer there would have been 300,000. So that's what the land would have been revalued with. That's correct. That is 300,000. Now, the same question I'm going to ask you from a deferred tax perspective, do we need to provide, is there a temporary difference in this regard? And how much is that temporary difference? For deferred tax purposes, so for deferred tax purposes, is there deferred tax? Yes, there is a deferred tax. Okay, sorry, there is temporary differences of 240, which is that 80% of the 300,000, right? Because we will pay tax on this, but in future. Okay, fine. Now we are done. We are done with the land part. Okay. So now, if you were asked to do the deferred tax note, so if you were then asked, what do I do here now? Okay. So if you were asked now to do the deferred tax note, okay, before we get in there, so E16 and E17. So if you go here, you would have then take that value. So that's E16. You would have take that value and then you go and disclose it. So there it is. So you would have then disclose it in your deferred tax note. You can separate them. You can combine them. I really don't have a problem with that. The idea is about the principle. Okay. So now we are done disclosing the land for the admin building, for the admin property. Now we're going to move into the building. Fine. Now they say on the 1st of June, so on the 1st of June is during the 2018 financial year. You have constructed the admin property as follows. On the 1st of June to the 31st of March 2018. Okay, so now this is the 2018 financial year. You have spent 2 million on this building. So this building is still incomplete. So what is the cost that you are going to recognize for building as far as the 2018 financial year is concerned? We've spent construction cost of 2 million rand, right? On the 1st of June 2017 up until 31st of March 2018. This falls within which year? So this period here, where does this period fall? Within which year? Where does that period fall? Within which year? It can be within the current year. But remember, the current year is the 1st of April 2018 up until 31st of March 2019. In which financial year does this period fall? in which financial year? Is it within 2018 financial year or 2019 financial year? Correct, that's 2018 financial year. So what would have been the cost that you're going to disclose in our note as far as the 2018 financial year is concerned? What is the amount? I've already given you the amount. What is the amount that you're going to disclose in the financial year regarding the building for 2018? What is that amount? Okay, the amount has already been given in the question, and the amount would have been 2 million, and because those are the only costs that we've only incurred at that point in time. Because remember, irrespective whether you're going to depreciate or not, but the fact of the matter is, as far as the building is concerned, we will then record whatever that we have created that fund. So in practice, then we would then have had a sort of a separate account or classification to call this a building or asset or a building under construction. Okay, so that the auditors or the users can see that, okay, but these guys have already spent so much to an asset that is under construction, so that there is no mismatch to say, but why is the depreciation so much in the financials, whereas you've got more assets? Okay, so we will classify that. In practice, we will classify that item as an asset under construction or building under construction. So we then go further into the current year. In the current year, beginning of the financial year in the 2019, right? We spent an additional 3 million rand for this property. Where are we going to disclose that? We are going to disclose that as, you can say acquisitions, or you can call it additions. I really don't mind, because it can be additions. It can also be acquisition, depending on the mode. So in this case, it was an issue of, or it was a fact of additions. So I would have added 3 million into my cost. So I'm reducing my cost base of this property to now 5 million. Okay, so my cost now would be sitting at 5 million. It means now that whenever that I need to do depreciation will be based on 5 million. However, in this 5 million, we are being told that when this building was completed on the 31st of June 2018, we decided, or it was estimated that there was a useful life of 30 years and there was a residual value of 800,000. Okay, the building on the 30th of June 2018 was available for use. That's important, because why is that statement important? For accounting purposes. Okay, why is brought into use important for tax purposes? Okay, it means that we are going to start depreciating when it was available for use. Yes, for depreciation purposes, that's correct. We'll start depreciating and then brought into use for claiming tax allowances. Because remember what SARS is saying, in order for you to benefit from our allowances or from our regime, whatever you call it, you must have taken something into use in order for you to generate income, because it makes no sense that SARS gives you an allowance whereas an asset is sitting there and doing nothing. The purpose is that you need to use that asset into something that will allow you to actually generate a revenue, whether now or in future, whichever. So you must have brought that asset into use. Okay, that's important. Fine. Now we are still with building. Fine. Now we need to determine as to what's the depreciation for building in the current year. Okay, so we now, once it's now ISO. Okay, remember I said your cost of the building now is now sitting at 5 million, right? So your depreciation must be based on that. But you need to take into account what your residual value is, and the fact that you will need to apportion when you calculate your depreciation. But for tax purposes, there is no apportionment, because that's what the statement is telling you. Let's run back and forth with them. For tax Where am I now? For tax purposes, there is no apportionment for buildings. There they're telling you, I'm giving you 5%, but now pretend that 5% is for the full year. Okay, so your depreciation, you will only have started depreciating in the current year, but for how many months would you have started depreciating? How many months would you have started to depreciate? Because remember, you've only completed the project on the 30th of June 2018. So it's going to be July, August, September, October, November, December, January, February, March 2019. So how many months are you going to depreciate in the current year? How many months are you going to depreciate in the current year? Can't be for the full year because you've only completed this project only the 30th June 2018. So in the 20, and then you're already in the financial year. How many months are you going to depreciate in the current year? That's correct. You're going to depreciate for 9 months. That's correct. Okay. So your depreciation for the 9 months then would have been 105. So remember what I do is, remember your useful life is 30 years, but now because I'm using Excel, I have now converted this to percentages. But now per annum, you would have taken 3.3%. Okay, always do it to 2 decimals unless the question indicates otherwise. Okay, fine. So now your carrying amount in the so your depreciation would have been that amount. Sorry. So that would have been your depreciation in the current year. And then obviously your carrying amount then would have been that amount 31st of March 2019. Now remember, your other required is speaking to deferred tax calculation, right? Now your deferred tax calculation for the building, you then take it directly from what we've calculated in here. There is your carrying amount. Okay. And then for tax purposes, we've already calculated for tax purposes, we said it's 5%. Okay. We started bringing this into use only in the current year, which is the 2019. So 2019 is going to be the first time that we are claiming an allowance in this regard. Okay. And that would have been your tax base. There you go. Then we have a liability of that amount. Fine. Now, if they ask you to then do the deferred tax note, you will then take it immediately into that. So remember, I've now added the 2. So it should give you 107,800. So I've added the 2. So now it gives you 107,800. There you go. 107,800 rand. Okay, fine. There's also nothing that stops you, because remember, you now already have the carrying amount for the building. You already have now the carrying amount for the building, right? There's your carrying amount for the building, but you also have the carrying amount for land as well. So there's nothing that stops you from going to your SFP and then says, in terms of the non-current asset, so for land in the previous year would have been 3.5. Is that the case? Okay. I am saying 3.5 because I've now added both the manufacturing and the admin building. So your land last year would have been sitting at 3.5. Okay, but now land in the current year, they are sitting at 4 million. Sorry, not 4. Sorry, they're sitting at 4 million rand in the current year. And then you can do the same for buildings. Say last year, buildings were worth 5.5316 million, because remember it's already in this note. Okay, the building were 5316 million, right? Because you've already got what the cost was, right? Okay, you go and disclose that 5316, and then in the current year, you're saying the buildings are sitting at 8083 million. There. You see, so you take one scenario and then you put across all your required, then you move on. So now, okay, we've done the deferred tax part. We've also for admin building and also for machinery. Okay, so I think by now you are passing this paper now and you're confident. You know what? Let me move on to the next item now. Now your next item is, I think we all still together at this point in time. Okay. So your next item is, but now you see now, there is nothing that wants you to go back to your required at this point in time, because you would have addressed this part, but you know now I haven't yet got into this one, right? I would have addressed this part already because I understood what the required was saying, right? I haven't got to this part already, but I've already addressed D, B, and A. But I know in between, I will need to do a known for non-current assets, and I have to do a general entry. But I know I am going to get there. Understand? Okay. So that's a nice thing of plotting your required. Okay. Now we're done with this point here. We're done with this point here. We are also done with this point here. We'll never come back here again, right? Now, okay, so also I think we're done with this one as well. Fine. Now we're going the next point that we're going to go to now. We're going to go into machinery. Okay. Now here I already understand what the question is all about. So within this question itself, there is 3 things that it's dealing with, or there is 3 standards that it's dealing with. One is dealing with IAS 16, that is your PPE. Number 2 is dealing with IAS. No, sorry, it's dealing with IFRS 5, which is a non-current asset held for sale. And then the third one that is dealing with IAS 36, right? But on top of that as well, I've then discovered that it also deals with inventory, just one line of the inventory, okay? And I'm going to show you why I say that, okay? So let's start with the first machine. So in the question, we've got machine X, we've got machine X and machine S and machine Z, okay? You will see that machine Z became about an exchange that it became about an exchange and that they done. But now also you'll see that in terms of machine Z, sorry, in terms of machine Z as well, in terms of the whole machinery, then there was then a disposal of the swimming pool division. Okay, but we're going to read now as to how that came about. Right. Now, on the 1st of January 2015, okay, this is during the 2015 financial year, PAM Limited purchased machinery X at a cost of 2,006,85, right? Okay, and then on the 1st of April, you bought another machine S, at a cost of 6 million. Okay, so machine X and S, they were both available for use on those dates and were brought into use for tax purposes to get that benefit. The useful life for both machines was 5 and 10 years respectively, with no residual values. Okay, fine. Now let's do first machine X up until the end of 2018. Okay, fine. Okay, here is my calculations. Okay, let me go here quickly. So let's say machine. Okay, I'll just open up all the machines. Okay, so this is machine X. Okay, machine X we bought for 2.65 million. Okay, and then we know in between that, let's go back quickly. Okay, somewhere we know that during the 2019 financial year, there was an exchange of machine X for machine Z. So that's how machine Z came about into the picture, that we have exchange. So we've given away machine X and then we got hold of machine Z. Okay, so that's why we'll see that here I have machine X, what happened before the swap, and then as a result of the swap, they've now introduced machine Z after the swap. Okay, then machine Z was only reintroduced in the current year, but also machine X was then de-recognized, okay, sort of sold or whatever you call it, de-recognized in the current year. Okay, so for machine X, it would have been the normal way that, okay, machine X, okay, machine X was bought for that much, So machine X was bought for this much, and then I would have taken accumulated depreciation for how many years? For about 4 years, because we bought it in the 15 financial year. So it's 15, 16, 17, and 18. But we only saw this in the current year, part of the year. Remember the question saying on 1st of June, so that is two months into the financial year, because our financial year start on the 1st of April. So April, May. So in the 1st of June, we've done the swap. So we only need to recognize depreciation in the current year only for 2 months, because we've done the swap with machine X and then bringing in machinery Z. Okay, fine. I think we're all together at this stage. Fine. Now, what we would have done is, I just want to go to the note quickly. What we would have done is, we would have said machine Z, machine X. So that was the cost, that was accumulated depreciation we've recognized up until the beginning of 31st of March 2018, right? Now, in the current year, we then had depreciation only for 1 month, right? Sorry, only for 2 months. So there is a depreciation that we recognize for the 2 months. But now, what we need to do is we'll need to see that then on 31st of March, when we took off this depreciation, what was the carrying amount of machine X? Machine X was then sitting at 850, 250 before we did the swap, right? Now, there is now something that we've actually missed to read, because it says here, when we did the swap on this date, machine X or machine Z, the fair values of machine X and machine Z was sitting at 1 to 50. To me, in my mind, it means that if machine Z is currently sitting in my books for that amount, for 85,250, it means, and it's currently valued at whatever amount it is, it means then there is something that happened, because in value it has increased in value and not currently with that. I would have then recognized the difference between what that amount is versus what is currently valued with, right? That would have been the difference that I would have recognized. Okay, but now machine Z, it's now swapped. Machine Z does not have a cost or a carrying amount, because we're getting it from somewhere. So what is the value that we'll have to bring now machine Z in our books? What is the value that we'll need to bring machine Z into our books? What is the value that we'll have to bring in now machine Z in our books? Because remember, there's only one value that we've been given, right? Okay, that's correct. But now, if we read on the further to the question, what's going to happen? It says the fair values of both machinery were reliably determined, blah, blah, blah. And then now we've transported machine Z at an additional cost of 35,850, and we have incurred installation and testing fees for 24,560. What does IAS 16 says in terms of the costs that are directly attributable to the asset? We need to add those costs. That is correct. So now, when we're taking machine Z during the 20, where's machine Z now? Machine Z is sitting here. Okay, let's forget about this one in the meantime. So when we were doing machine Z, if we were supposed to bring machine Z into our books, we would have brought machine Z in our books for how much? For 1910, 106. How is that 19, 106 made up? Someone has already told us how it's made up. We have taken into account the cost, but also in terms of all the directly attributable cost in bringing the asset into its present location for use as intended by management. That's what IAS 16 is telling us. So that would have been the recognition amount into our books. Okay, and then obviously you're going to take depreciation off for the 9 months that, because remember you only had it from the 1st of let me see quickly. Okay, so machine Z was available for use as intended by management and was also brought into use on the 30th of June 2018. Okay, so it's not going to be for the full year. It's July, August, September, October, November, December, January, February, March. It's going to be how many months? It's going to be 9 months that you had it. Okay, so then that's what you would have disclosed in your don't. Okay, so then you're carrying amount. Why did I say revaluation? So this was supposed to be, because it's either additions or it's acquisition. Okay, sorry, undo that. I'm just gonna paste it as a value, because that's supposed to say multiply by 0. That's not revaluation. That's supposed to be additions or acquisition, whatever you call it. Okay, fine. So your carrying amount then for machine Z would have been sitting at that point, at that amount. Fine. Now, if you were asked to do a deferred tax calculations, you would then show it in this manner. Okay. So the reason why I've highlighted this part black here is because we are not given as to what the value is. Because remember the question said we are not required to include other items in the deferred tax. It only says only for properties. This is not a property, but what I'm trying to do is I'm trying to show you how it would have looked like. Okay, fine. Now let's move on to the next part of the question. Right. Okay, obviously when you do your depreciation for machines, you don't forget to include your residual value in your calculations, but I think I did. I'm gonna see quickly. I think I did include it. Okay, yes, there is your residual value included. Okay, fine. Now let's move on to the next part of the question. Okay. Now you have a swimming pool pump division. Okay, so on 1st of March 2019, the directors decided to sell the swimming pool pump division. Okay, because this division was not making profit over the past 2 years, right? So when did we take this decision? We took this decision a month before the end of the current year, right? Fine. Now, what's very important is, okay, it's this part here that we're going to get to. Because when I read the question initially, I was trying to see, but what are the assets that are composed under division, under this division, okay? But now I only realize when I get to this stage here, fine. So if I tell you the only asset from the above information that we read that is part of the swimming pool division is only machine S. Did you actually do machine S? Oh, sorry, we didn't do machine S. Sorry about that. So we didn't do machine S. Sorry. Okay. Let's go quickly to machine S, but we will follow anyway the same principle for machine S. So we will follow the same principle, and nothing funny happened to machine. Wait a second. Nothing funny happened to machine S. It was the normal way, right, to do your depreciation for the 2 years that you had it and for the current year. But for the current year, it is only going to be for 11 months because of what you are currently busy reading here. Okay, so you have done so the normal way. But what's crucial for me is it says on the 1st of March, you have decided to sell the swimming pool division. The swimming pool division has machines S, which is the switch, and inventory, right? Fine. Now, and I'm reading it this way to make you understand what are the assets that are in machine on the pool division, okay? It says on the 31st of March, all the criteria to classify the swimming pool pump division as held for sale as stipulated under IFRS 5 for investment assets held for sale and discontinued on operation were met. Okay, so management expect to conclude in a single transaction by the 1st of May 2019. Okay, now we are given here information as to what is included in this, what are the assets that are included in the machine switch in the pool division. So the assets are machine switch and inventory, right? Now, okay, fine. Now at this point, sorry. So at this point, so there's a distinction that we need to make between the, because at this point we've only made a decision to sell, okay, but we haven't met the criteria in terms of IFRS 5. So keep that into mind, okay, because we've only met the criteria on the 31st of March 2019, right? Meaning that we would have then depreciated machine S from the 1st of April up until the 31st of March, because that is when we have met the criteria. On 1st of March, we did not yet meet the criteria. So there was no way from a fair presentation or from a presentation perspective to say that we're recognizing that machine in terms of IFRS 5, okay? Take that into note, okay? So what they're telling us here on 31st of March 2019, inventory for 480, okay, that was the carrying amount. However, the net realizable amount was detected to be 440 million. Okay, now why is this important regarding the net, what they're giving us carrying amount and the net realizable value? If you go to IAS2 of the standard, IAS2 of the standard, and definition number, under definitions, so under definitions, paragraph 6 says, tells you what a net realizable value is. It says the net realizable is the estimated selling price in your ordinary course of business, okay? And then less any anticipated cost of completion and the anticipated cost necessary to make the sale. That's very important, because what they're saying that for that inventory, we expect to sell it for that much, or when we sell, we expect to receive that amount. So number 7 says here, your net realizable value refers to the net amount that an entity expects to realize from the sale of inventory in the ordinary course, right? From the ordinary course. Now, if you go to paragraph 5, I'm going to get to the absolute practice just now. If you go to paragraph 5, and I'm doing this to you because remember, as part of the required, you need to disclose the inventory. Now, I'm trying to assist you that if you have to disclose now your inventory in your statement of financial position, at what amount? What am I doing now? At what amount are you going to disclose? Okay, this is supposed to be under current assets. Sorry. So this one is supposed to be under current assets, not non-current. So we just do this. Okay, I've already given you an answer anyway, but anyway, it's fine. It doesn't matter. Okay. So what I'm trying to assist you by reading from the script is to say, at what value are we going to disclose the inventory in our PIP, in our statement of financial position? Paragraph 9 says, inventories shall be measured at the lower of cost and net realizable value. So what is the lowest between your carrying amount or cost and the net realizable value? In this case, your net realizable value is 440 and your carrying amount is 480. So it means when I pick up your script or I pick up the financial statement, I'm expecting to see that your inventory is reflected at your net realizable value, because that is what the lowest is. Your carrying amount, your cost is not the lowest currently, because your cost or carrying amount is sitting at 480. Okay, so that's correct. That's 440. So that's correct. Fine. Now, so we've won this fight now. We know what value you're going to use when we need to disclose now our inventory in our statement of financial position. But remember, we have not won yet our fight. We know that to some extent here, machine S must now declassified as PPE in terms of IAS 16, but now reclassified as IFRS 5 investment. When here, this date here. Okay, now it means for the current year, I am going to provide for depreciation for the current year only. I will need to provide for depreciation as from, for the full year actually, right? Yes, I think for the full year, because the decision was only made, just gonna see it if they have, no, it's supposed to be for the full year. Because remember, on the 1st of June, it was, we've only decided, but when was the criteria, met? The criteria was only met on that date. So on the 1st of March, we've only decided to sell blah, 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 but now, on the 1st of June, on the 31st of March, that is when you actually met all of the criteria, right? It means that on the 31st of March, as far as machine S is concerned, we would have had a carrying amount of 4382100. That is what is currently sitting at, fine. But now we know that machine S is part of a group of assets to make up the pump division. Now, what I want to see is what is the carrying amount of the swimming pool pump division? Okay, don't give me the carrying amount. So if I had to calculate the carrying amount for the swimming pool division, what are the two assets that I'm going to consider? If I need to calculate the carrying amount for the swimming pool division, what are the two assets that I need to consider in order for me to be able to calculate as to what is the carrying amount of the swimming pool division? Give me the two, what am I doing now? Okay, give me the two assets that I need to consider. Give me the two assets that I need to consider when I need to calculate the, I only need the asset, only the asset. Give me the two assets that I need to consider when I'm calculating the carrying amount of the swimming pool division. There's only two assets. It's machinery S and inventory. That is correct. Fine. Now we already know that machine X has a carrying amount of 4382. Right? We also know from the question that inventory as well has the carrying amount of 480. Now, we need to keep in mind that we are not dealing with individual assets. We are now dealing with a swimming pool pump division. Now, we've been given the fair value less cost to sell of the swimming pool division at 31st of March. Okay, let me go back quickly. So this statement here is another clue for you to say that I could not stop depreciating this item here, but only here. That was the clue for you. If you were confused as to which date to use between these two, there is a clue for you. They've given you the clue, right? Now, the second part for you guys, and the nice part for me is we've been given this fair value less cost to sell for the division, but not for individual asset. Okay, we've been given as 4.5. Right now, we do have what the carrying amount is for all the assets that are included that are included in the swimming pool division. So I can say carrying amount here, swimming pool division. Okay, I've already been given what asset makes up that. Fine. Now what I'll do is I will now need to assess to say, look, I'm in a phase or I'm in a process of selling this division. It's not making money for me. Now I need to sell this thing, right? Now they've given me that the fair value, or what is currently valued at, it's 4.5 million, right? There it is. It is given in the question. Remember, guys, you get marks for specifying that the fair value less cost to sell is so much. You get marks for it, so you must specify, right? Because it's also a formula in how you're going to get about in determining what your impairment is, right? Okay. Now, but hang on here. My carrying amount for this division, so my carrying amount for this division is more than what this asset is more than what this division is currently valued at, right? Which means I have a problem, or not really a problem. It means that I need to do something. I will then need to bring this asset into what currently it's currently valued. Okay. Now let's do this quickly. Fine. If you go to IFRS 5 in terms of paragraph 1, okay, just read quickly. So now paragraph 1 of IFRS 5 says, so the objective of this standard is to say assets that meet the criteria to be classified as held for sale, okay, they need to be measured at the lower of its carrying amount and the fair value less cost to sell, right? Fine. What are they saying? Assets that are classified, so on the 31st of March, the moment we classify machine whatever, as the IFRS 5, we will need to measure it at the lower of its carrying amount or fair value less cost to sell. What is what is the lowest between the carrying amount and the fair value? The lowest is the fair value. So now I think I might have made a mistake for you guys. Okay, don't do it like me. You need to do a separate note here. So now what needs to happen here is 4.5 million. Okay, that's something that's not right, but I'm going to fix now. Don't worry, that's fine. Now, what needs to happen here is, so you must put in here impairment. I didn't put the amount, so you must put in the impairment amount here. Okay, once you've done determining it. So it means if I had to do a note, which is I didn't do in this case, I've just included in one thing, that I would have to recognize that the impairment, sorry, the cost or the new carrying amount of the IFRS 5 investment as far as machine X is concerned is going to be 4.5 million rand. Okay, that's what that statement means. Okay, but however, what's important is that once this item is classified as IFRS 5 asset, you will need to stop depreciation. It says depreciation of such asset needs to stop. So what I'm saying is, when you go to the 2019 year, I do not want to see depreciation as far as that amount is concerned. Because remember, you are now holding that asset for sale, but not for use in your operations. Okay, so that's what you would have done. But if you go to paragraph 13 as well, paragraph 13 will then say that paragraph 13 then speaks about abandoned asset. What happens in the case of you now not hold an asset for sale, but now it will be abandoned? It says that an entity you shall not classify a non-current asset as held for sale if you've abandoned it. You must have had a decision. You must have made a decision to say that I am now going to sell this, and not simply abandon the asset. If you also go to paragraph 15, paragraph 15 says an entity shall measure a non-current asset, okay, group as held for sale at the lower of its carrying amount and fair value. So it means that in the current year, if you go to your, if you go to your, if you go to your, we need to fix, if you go to your, this is not right, this should be 4.5 million. Okay, but obviously then something is going to change somewhere, somewhere in here. Okay, but it's fine anyway. So ignore these values for now. Okay, because remember one machine we must see, so from this value machine S must be excluded because machine S has now changed from IS 16 to IFRS 5. So that's why the value is lower in the current year compared to in the previous year, right? Okay. Okay, now we move on to, let's go to paragraph 23 quickly. Now, it says here, so when you're doing your impairment, it says your impairment loss recognized for a disposal group will have to reduce the carrying amount of the non-current asset in the group that are within the scope of the requirements of this IFRS 1. So you would have seen that now within the calculations, machine S was not machine, sorry, which machine? Okay. So you would have seen that the cement division was valued at 482. The 482 comes about that amount plus the inventory. So you will see that this would have been valued at 4.86. But now the standard is saying impairment loss is to say, I am going to recognize an impairment loss for the disposal group, and I must reduce my carrying amount for the non-current asset held for sale in that group within this specific standard. Okay, so now this group is valued at 4.5. Now the problem is if you go to IS 36, right? IS 36, there's a problem that we have in there, but not entirely a problem because IS 36 number 2 says the standard shall be applied in accounting for the impairment loss for all assets other than, you go to paragraph H, other than non-current assets that are held for sale within IFRS 5 prescription. Okay, but now if you go to IS 5 and then you go to paragraph 23, it will say no, but you can apply IS 36 because where it says that you will apply impairment in the order of allocation as set out in paragraph 104A and paragraph B and 122 of the IS 36. So irrespective of they saying here no, but now IFRS 5 then allows us to actually use IS 36. Fine. So don't worry about that. So what we would have done now, we would have then went and say, okay, there is our impairment now for the current year, which is 36,200, right? Impairment 36,200. But okay, but now I'm assuming that now I'm doing now the IFRS 5 investment. Otherwise, we would have done this separately. Why is it not adding up? Okay, so I'm sorry. How much is it? 36 to 100. Sorry, 362. So, but now if you do this separately, then it's going to work out rather than how I did it here. Because remember, this must be disclosed separately, and then this column here must also be. So these two will now be within the same column because you're already dealing here with an IFRS 5 investment. Okay, so don't mind that part. Now, so what you do here is, so our journal entry then would have been that we are now having an impairment loss and accumulated impairment loss. But now remember, this impairment loss relates now to an IFRS 5 investment, right? And as well as that, fine. Now we need now to reclassify. We now need to reclassify our new asset now, which is the IFRS 5 investment. Remember, this item now is sitting at 4.5, but no longer at 4.82 because we've already taken an impairment of that amount, right? And then what you do here, we will then debit now in terms of what is the new value of inventory, and then what is the new value of machinery. Right? Now remember now machinery and inventory were sitting at those carrying amounts, right? But now remember, we have then since written off. An impairment loss. Let's assume the impairment loss is 362,100. Okay, which means now the value of our machinery now changes to 402, because remember, in terms of the standard, we can then not allocate impairment loss to inventory. The standard is telling us we can't allocate impairment to inventory. FAC3702 says this standard shall not apply. So it says this standard shall be applicable in accounting for impairment of all assets other than in the case of inventory, other than in this case. Because remember, inventory is dealt with in terms of IS2 of inventories. So we can then, the impairment that comes out of the swimming pool division cannot be allocated to inventory. You can't allocate inventory in terms of the standard. So which means that the only carrying amount that then would have reduced is going to be the carrying amount that relates to, why is it not showing? It's the carrying amount that relates only to, that's not right. Sorry, that must come here. Undo. Okay, let's just do that. Undo. Okay, that. And let's do that. Okay, sorry, quickly. So it means, okay, there we go. Sorry, it must be that. Okay, must give you 4.5. Okay, so remember, you cannot reduce the carrying amount of the inventory because it falls outside of the scope of IS36. The standard is telling you that you can do everything else with IS36 except these items here. Okay, but now which means that this impairment we're then going to allocate it into machinery. Right now. Okay, so there is your machinery. So there is your IFRS 5 investment reflected in that amount. And then obviously this value of the machinery here is then made up of the other two machineries because we've now moved machine X out of that to this one. Okay. So, and I think that's about it. So remember, this machine then would have been out of here as well. So then to no longer be relevant or applicable. I was just trying to show you now the complete picture of how it would have looked like. Okay, and obviously you'll do your deferred tax note for machineries as well. I then put in a value here for a specific purpose. Okay, and what else are we missing? Let me see quickly. Is there something else that we're missing? We've done all the points here. So I think there's nothing else that's missing. So obviously you would have read this information in terms of trying to help you. So when you initially receive your question paper, so you would have we've done machine. Remember we've done machine S already. Machine S is the one that now we've actually forms part of the swimming division. So we've actually catered for. So what you would have done, you would not have included machine. So what you would have done in terms of the requirement, starting from this point on here, you would have then try and disclose this part separately in terms of as a note for IFRS 5. But I've just done it in one. in one question here. So that part is wrong. 37900. Okay. I didn't put in a formula here. Oh, sorry, I didn't put in a formula here. So now my things doesn't update correctly. Yeah. So what you would have done is that you would have yeah, because if you add these two amounts, then it actually gives you the 4.5. But now remember, I've split these two for a specific purpose because the impairment would have been allocated all to machine S and not inventory. Okay, and then I would have then de-recognized it at that carrying amount. Fine. Now this amount here, you would have then go and record it now as a new cost in terms of the IFRS 5 investment. Okay. And then yeah, that's about because remember, because with the reason I'm doing this, I would have already provided for depreciation here on top. No, so not depreciation. Impairment, not depreciation. Sorry, it's impairment. So you would have already provided for impairment on top. Okay, and then I think that's about it. Just want to go back quickly and see if we've covered everything. Okay, we've covered everything. Okay, I think that's about it. So we've covered that. Then obviously you would have done a separate note for this, unlike me that I've done it within the PPE. So you would have done a separate note. And then we've done the calculation of deferred tax. And then also remember we've done the general entry for the impairment, but we've also done the statement of financial position for only the asset section. So and we include everything in here. And then remember, this would also be principal marks carried through because there's only 6 months allocated in there. Okay. So I think that's about it for today. So what I'll do is what we're going to do next. I am going to upload the question that we're going to do for our next section on Thursday, and perhaps I'll upload it over the weekend, say between Saturday and Sunday. So please go through it, and then we're going to work it out together. And apologies to those that couldn't access today's session, but the recordings of this session is going to be available. And what they've also tried and do is to also try and convert these sessions into a YouTube access, so that it's easy to access to everyone. I think till next time, and then I'm going to see you then. I hope the session was helpful. So the idea was not to give you answers. The idea was trying to prompt you to think using the principles that are within the ambits of this module or in this course. Because remember, the principles are going to take you far as far as the module is concerned, but also when you get into practice as well. But also do me a favor that you need to try and get acquainted in terms of reading the standard. I know in your study guide, they've actually tried to simplify for you to take the extract out of the standard into a study guide. So make use of a study guide, because that study guide is quite very well written, comprehensive, simplified. So make use of it, because even with me sometimes, if there's something that I'm not getting the standard or not understanding clearly, then I go to the study guide. So make use of trying to get into the routine of trying to see what is the standard saying to me, because remember, in practice, you're not going to have a study guide. So get into that routine of trying to read what is IFRS saying, what is the study guide saying, and all those kind of things. Okay, and I think up until next time, I think that's about it. And then thank you for participating, and thank you for your attendance. I'll see you then the next time around. Thank you, guys.